One of the world's largest institutions, Bank of America, is investing entirely in XRP, according to the president of Ripple. This is crucial information for a number of reasons. This further integration of XRP and Ripple's ecosystem by Bank of America is encouraging news for the cryptocurrency market. Now that we've covered that ground, let's examine how conventional currency, the Bitcoin industry, is already seeing involvement from Tradfi. The Kexus platform is one example that JP Morgan has, promising quicker payments, tokenized investments, and easier transferring of money, assets, and data. This new financial infrastructure is founded on blockchain. A private blockchain on which Kexus operates differs from a public blockchain in important ways. Distributed ledger technology, public blockchains receive far more traffic and interest than private ones, regardless of whether a large corporation like JP Morgan is supporting them. The lack of adaptability and transparency in private networks renders many of these initiatives moot. Those participants should increase their use of public blockchains. It may represent a significant shift, and it's likely the direction the industry will take moving forward. However, the fact that JP Morgan is already participating demonstrates that prominent figures in conventional finance are actively participating. Not only that, but other well-known financial institutions are also becoming involved. For instance, by the year 2026, State Street plans to begin storing cryptocurrency, while Citi has been a member of the in 2021. Citi was already a major participant in the cryptocurrency market, and they are continuing to promote digital asset instruments that adhere to their risk and governance standards. They make extensive use of technology, which begs the question of what it is and whether it is related to Ripple's acquisition of Medico. Citi clearly intends to digitize tokenization, blockchain-based mechanisms for custody and settlement. Without a doubt, they are keeping an eye on the change. On April 3rd, BNY Mellon joined the fray by enhancing their digital asset platform with additional on-chain options. These announcements are unique, and the laws and regulations are always evolving. SEU 121 was removed. After reviewing the case, the FDIC and OC have enabled large financial institutions to expand their crypto operations. The time has come for them to enter the market. The next step is an open question. The solution is exponential expansion. Specifically, Bank of America has been dropping indications about their crypto ambitions throughout the year. The release of a stable coin was discussed in the month of February, and back in January, its CEO expressed the belief that, should the government grant permission, the financial sector would begin utilizing cryptocurrency payments. Everything pertaining to XRP is related to Ripple, since Bank of America is a partner in this. Regarding regulations, the Bank of America has stated that in order for financial institutions to completely integrate cryptocurrency transactions, they must have verified, unanonymous, and straightforward. If regulations of this kind are enacted, banks will be forced to adopt these new digital currencies in order to meet the demands of their customers.
More faster and more flexible money transfers.
The potential devaluation of the US dollar is a common concern among financial professionals. However, many believe that digital currencies would strengthen the dollar in the long run, instead than undermining its function. The US dollar plays a crucial role in bolstering the economy. During his campaign, Trump emphasized the importance of maintaining the dollar's status as the primary reserve currency of the globe, and he appointed Scott Bessent to the position of Treasury Secretary. A strong dollar is good for the economy, according to Bank of America CEO, but he also mentioned that the expansion of investing may be unaffected by using cryptocurrency for daily purchases. When you're out and about buying lunch, for instance, it's easy to merely whip out your debit card, Visa, MasterCard, or Apple Pay. Another option for payment in the same vein could be cryptocurrency. Everything changes when it comes to investments such as Bitcoin. Indeed, a great deal. It continues to perplex me that those in conventional finance fail to grasp the whole nature of the issue when they discuss it. Tokens and the networks that enable blockchain and distributed ledger technology (DTD) are not immune to their effects, in my opinion. I have no problem with widespread adoption of cryptocurrencies for financial transactions. There's a tremendous opportunity to earn money. Above and beyond that, the OC is also in the process of what banks may do with cryptocurrency was made plain in March. The OC restated the bank's authority to provide cryptocurrency storage and execution services on May 7th. Authorities are clearly becoming accustomed to the crypto space. Along those lines, the FDIC has announced that financial institutions are no longer required to get specific authorization in order to deal with cryptocurrency. The Fed rescinded its guidance to financial institutions on cryptocurrency transactions. These events have transpired within the last several months. Taking everything into consideration, it is clear that the market is now accessible to major participants. What follows is an analysis from the perspective of an investor in digital assets. The pace is going to quicken. The 10 years of labor at Bank of America were highlighted as they spoke about the CEO. The actions taken by Ripple. Christian Carlo of the Balapedia podcast, which I highly recommend, is the one who first proposed this notion. Everything is happening at a breakneck pace now. No one anticipated how quickly it would happen. Traditional financial elites were able to easily sidestep developing a crypto strategy as a result of the Biden administration's hard line on crypto. This being said, that justification is out of date. It's risky for the head of a conventional bank to not have a solid strategy for cryptocurrency. It is possible that younger executives are prepared to take their position. Notable figures from the world of conventional banking are clearly making waves in the cryptocurrency market this year. Chief Executive Officer Brian Moysen of Bank of America, for instance, recently stated that once stable coin laws are enacted, their own stable coin is about to be released. The transfer of funds between countries via a system known as correspondent banking is another major source of revenue for banks. Using this method, global banks transfer trillions of dollars annually. However, everything will be altered by stable coins. Consider the many historical applications of photography. To the office, you could develop your film at a Kodak store on every. When I was a kid,